Good morning. Today is Wednesday, June the 28th. The time right now in Singapore is 3 minutes to noon. Now let's do a bit of a recap as to what happened overnight. On Wall Street, we have the release of the durable goods orders. The number was more than expected. The market was expecting a negative 1%, and the data that was released was actually positive 1.7%. So this was actually a surprisingly strong number. On top of that, we also have the release of the non-defense capital goods order. Market was expecting no change. In fact, they're expecting no growth whatsoever, but the number that came out was a positive 0.7%. So taken together, we can see that the consumers in the States are basically still spending. And that is important because durable goods is actually quite a reliable measurement of the confidence in consumers. And that actually caused the equity markets to rebound off the Monday's low. And we can see on the chart here, this is a 4 hours time frame. The Dow Jones actually bottomed out on Monday at 33,610, and likely to see further extension of this overnight rebound. Possibly the market could be gunning for 34,100 to 34,215, which is a level that I've been telling you guys throughout the week itself. And that could possibly result in either one of the two scenarios. Market may actually peaks here and before coming down again to complete a three-wave decline, possibly targeting the 33,000 even levels, or the other market could actually use this space at 33,610 to actually propel higher to challenge the high that we saw so far, which was registered 2 weeks ago at 34,588.7. So either of these two scenarios remains possible. So do watch out for both scenarios. Another possibility, if the market may come back down again and go back into this bracket of prices, because the Monday low actually misses my ideal target to buy by a whisker. The ideal level for me is 33,351 to 33,587. The market high was 33,610. So obviously we miss it by at least 20 pips. 20 points, so to say. So ideally, I would love to see the market dip back into this bracket. But regardless, if the market rebound, it may not necessarily see a strong challenge of the high so far, but maybe it will unfold as a three-wave decline. Okay, do watch out for those possibilities. In the S&P 500, also we see the market go into this bracket of prices. Unlike the Dow Jones, the market actually dipped into a preferred buying area, and the area is 4,296 to 4,355 levels. So the low traded was 4,328. So that was ideal. So now going forward, would the market continue to charge higher? Possible. There is always the possibility the market may use this opportunity to gun higher above 4,448.5 that we saw 2 weeks ago. Or the market can come back down again, essentially doing a three-wave pullback to 4,241 to 4,269. So either scenario remains quite possible at the moment in time. So we have to watch the development here as we go forward. Over the Nasdaq, we are also seeing a bit of a rebound from overnight low. We can see on Monday itself, the low was at 14,687. And last time we have a bit of a rebound, but this rebound looks a bit tentative. Of course, we are still not ruling out the possibility that we may see another dip going forward. And ideally, I would love to see prices coming back to 14,233 to 14,375. That will be a much more comfortable level to actually look for a buy. And this buy could be the last hooray before the market picks up. I have this idea that the market may somehow find a peak between 15,270 to 16,115. So this last bit of a rally here could be, for all I know, the last rally for this entire sequence. Okay, and over in Asia, we see that the Nikkei itself has rebounded based on the idea that overnight we have US equity on a somewhat firmer basis. The market has already gone back up, and the high traded so far at midday is at 33,118. So this is already beyond what I thought it would do. So anyway, let's see watch for the development, because so far we have a three-wave pullback, and for the market to actually ignore or rather invalidate the idea of a potential five-way down, which I mentioned yesterday, is for the market to overlap the low here. The low here is at 33,089, and the high so far is, yeah, it has already overlapped. So there is no possibility at least in wave theory, that is going to be a 5-wave. It is already a 3-wave, because if it's going to be a potential 5-wave, the low here that I mentioned at 33,089 cannot be overlapped, and now we have an overlap here. So essentially, I have ruled out the possibility of another dip. So do you believe that the market is going to go beyond 33,773 that we saw so far? Quite possibly, because the entire trajectory of the Nikkei is pretty bullish unless something major happens. And that something major happened was something that I actually mentioned yesterday, because the rate in which the Japanese yen have been falling is causing concern among Japanese officials, and they are beginning to hint that the Bank of Japan may actually come to the market to actually intervene. A convenient level to intervene in the currency market will be somewhere around 145 to the between the dollar and the yen. So later on, when we go to the dollar yen chart, I will show you exactly what I mean. But basically, that's this market, if nothing else happened, it could possibly have enough fuel to continue to hike, to go higher. So unless, like I say, something else major happen in a change of monetary policy, could be a big one. So do watch out for those possibilities. Over in Hong Kong, the market has stabilized at 18,767 over the weekend, and this market now has been going higher. This morning we have no follow-through buying, not yet, okay, but I think there is always a possibility that the market may have already bottomed up, at least in terms of the corrective pullback here to 18,767, which is actually lying in between a preferred range of prices, which I have previously mentioned, that may actually entice buyer to come back into the market. The level is 18,496 to 18,851. So we can see that the market low at 18,767 is well within this bracket of prices. That is the reason why I think market may be actually going higher, possibly to test the much high at 21,000, on the condition that it take up 20,300, okay, because this has been a barrier to higher prices previously. So in order for the market to go higher, we need this market to clear this hurdle. And then even if the market rebound, this is seen to be a technical rebound, okay, because the entire trend in the Hang Seng is actually quite bearish. Over in the mainland index itself, the idea that we could see a low risk, high reward setup by buying actually is quite panning out pretty well so far. The low so far that we have seen was on Monday at 3,801, and the market has come back into this bracket of prices, which I think is quite conducive to buy, and those levels are 3,759 to 3,818. So the market go back to a low this morning at 3,808. So this is actually within expectation. So from here onwards, there's a possibility of a bounce back to actually attempt to cross over into 4,000 levels. But again, this is very tentative because the rebound so far has been less than ideal. But over the next few days, we may see a bit more robust buying interest comes in. But that is the possibility here, okay? Over in energy markets, we see that the crude oil prices has come back down again, because yesterday we saw the dollar rebounding, and that is obviously not good for commodity prices. Prices come back down, but I think it is still a good buy in my opinion, because like I mentioned previously, this is a triple bottom, and triple bottom is a pattern that actually is suggesting that the market may already find a bottom here and is getting ready to rally. And if we have no more new low below $67.32, then maybe the market could be gunning for at least $73.20 to as high as maybe $74.60. So this is a potential bracket of my target if the market continue to rally from here. Over in precious metal, in terms of silver, in terms of gold, because of the dollar strength, we see that the gold actually backpedal. It was attempting to go high since hitting a low at $1,910 over the weekend, but yesterday the market come back down to test this level. The low traded at 1,911, and can we say that this is a double bottom, at least in the short term? If you believe this is the case, then I think the market could be building a case for higher prices. At the bare minimum, there could be an attempt to go to $1,970, perhaps even to challenge the 1,984, okay? But again, this is still very tentative. We need to see further evidence, okay? Over in the silver market, silver is also pulling back a little bit from overnight high of $23.10. Throughout the whole of yesterday, the market has been attempting to go beyond $23, but alas, it couldn't hang on to its gain and came back down. This is bidding up for a case for a further decline into $22.50 to $22.60. If the market do pull back in a three-wave, I think this will be a great area to pick up some more long positions and do watch out. Okay. Over in currencies, we see that the dollar basically has pulled back and then rebound. So the whole of yesterday, the market was attempting to rebound. So because the market actually bottoms out at 101.96, this give me the idea the market could be doing a ABC move targeting 103.26 to 103.60 levels. So this level, the market actually went to 101.96. It's just marginally below my ideal buy price. And let's see if this can be sustained over the next few sessions. Okay. Now, when the dollar wants to go up, obviously we are looking at a somewhat bearish outlook for principal currencies like the euro dollar. And like I always mention, the euro dollar is basically a mirror image of the dollar index. So when we see the dollar index is about to do an ABC up move, we are likely to see a corresponding ABC down move in the euro dollar. And this is panning out also quite within expectation. Yes, the rebound so high is 109.77. And from here onwards, the market could be gunning for another dip below 108.45 towards 107.70 to 108.10. Okay, so do watch out for this three-wave pullback here. Okay, in the sterling itself, the market is possibly doing a further correction in a potential fourth wave. So the fourth wave here may actually end somewhere here, ideally somewhere here. Okay, so if this is the case, the market could actually gun for 128.50 on the way to 130 ideally. Okay, the other way is the market do collapse below this 126 level, then obviously something else is happening. A top could be already be in place. So for the time being, I'm going to look at it that this is an entire correction getting ready for another last rally beyond the 128 half levels. In the Aussie market, the market actually dipped a lot deeper than I expected. The market was actually holding up quite well going into yesterday night trading, but the market peaks out at 06720 before it lost everything and dropped 100 pips to 6620. And this is the low so far this morning. And if this low remains throughout the day, there is a possibility the market may rebound back again to test the 0.69, possibly gunning somewhere between the 0.6950 levels. Over in the dollar Canadian, you can see dollar Canadian finally stabilized. Okay, we see that the last night we have the release of the CPI numbers for Canada is actually seeing headline CPI has been coming down. That should actually be positive. So what happened is that the for positive for the dollar. So when you have falling inflation, the risk of the central bank, in particularly the Bank of Canada, having a high interest rate, the risk actually goes down. And if that's the case, most of the people who have been buying the Canadian dollars will now be looking to cover the position. So I believe this is part of a short covering in the dollar versus Canadian. And if this short covering continues, it may be it may actually retrace all the way back to 133.20 to 133.90 levels. So this is part of a corrective pullback here. Okay. In dollar yen, dollar continued to edge higher overnight to 144.18 levels, and then we are getting very, very close to a number which I believe could be a catalyst for the BOJ to come in to intervene. That level is 145. It's a very nice round number here. So the market may be edging higher, but as it edge higher towards 145, do watch out for the possibility of the Bank of Japan coming in to intervene to support the yen, meaning to say they will sell dollar to buy yen. So if that is the case, based on what they did last October, the market actually fell 16%, okay, from 152 to 127.20. So that could be a repeat of what we are seeing here. So it is a big thing if the Bank of Japan actually intervene in the currency markets here. Over in digital assets, the Bitcoin has gone into a sideways consolidation. The high traded so far is 31,458. And this consolidation may see further consolidation going into today's trading, possibly gunning for a dip below the 30,000 levels to as low as 29,150 to $29,500 range. So this will be the ideal bracket, but I'm always prepared for a slightly deeper pullback here to as low as 28,000. Regardless of the case, I think this market is suggesting that the bulls are in the market. And overnight, we have further news that Fidelity is going to file for a spot BTC ETF, very similar to what BlackRock is filing for. So we are beginning to see even more signs that the big boys wants to get into the action, and that means that they are going to bring in their high net worth client into the market, and this could be seen to be a bullish, a catalyst for higher digital asset prices going forward for the rest of the year. So this is my opinion only. So in the meantime, that's all I have for you. Do take care, and I'll come back to you with another update tomorrow. Bye bye. Take care.